Hey, this is June from Turning Point Life Investment, and this is your market analysis for May 15th, 2010. Okay, let's start with the SPY 6-month daily view. I mentioned last week that we can probably get a snapback higher simply because the market was so stretched out last week that it's so far away from its moving averages. And whenever that happens, it usually produces some kind of a relief rally, a snapback towards the moving averages. And that's what we got this week. And hopefully, you guys managed to enter some shorts or some puts right around this area simply because, well, the market is no longer buying on the dips, right? The mentality and the trading method has changed. Before, traders were buying on the dips, but it seems like it's using the rallies as a nice shorting entry. In other words, they're selling on the rallies. As proof on Friday that when we got to a resistance level, that's when the bears and that's when the shorters came in to drive this market lower. So right now the market is testing some pretty critical support area, or at least this entire gap is being tested right now. So somewhere around 113, around this area is some pretty significant support level. I would say if it's broken, there's a very high chance we will probably come back and test 105. However, if prices manage to hold around this 113 area, it'll probably just chop around for a bit. Okay, so it can get pretty choppy between 113 and 118. And I think right now we're more or less within some kind of trading range. I know that's kind of sloppy, but let me just take it out and redraw it. So if the market breaks above 118, then of course we might have to change our tune in terms of bearishness. But if we can break down on 113, then that means the selling is continuing and that this is still a downtrend. So overall, these are the two main levels that I'm looking at: 118 for upside confirmation, and a breakdown on 113 as a confirmation to the downside. Okay, next we go into the VIX. Just taking a look at the sentiment and volatility. We had a nice bounce off of this 28-day moving average, produced a nice hammer, and we shot up from there. So volatility is up. That means option premium is up as well. And as I mentioned, when option premium is up, that makes for great option selling. So right about now would be great for selling naked calls, naked puts, and also credit spreads because the premium is very hefty right now.